makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. Secretary of State, Marco Rubio, is heading to Hungary for talks with the Prime Minister, Viktor Orban, who has emerged as one of Russia's closest allies in Europe. Rubio's trip follows his appearance at the Munich Security Conference, where he told Bloomberg that Europe and the U.S. will always be bound together, but warned that their shared values are being eroded. Well, with us now is Rachel Ellehuus. She was formerly at NATO as the U.S. Secretary of Defense representative in Europe and is now Director General of the Royal United Services Institute, the world's oldest security and defense think tank. Rachel, thank you so much for joining us. So for me, it was only my second Munich Security Conference, and it was very clear that people applauded. I think he also got a standing ovation, the Secretary of State, Marco Rubio, because he was less antagonizing than J.D. Vance last year. But what do you think the transatlantic relationship is like today?
Yes, I absolutely think the people in that room were breathing a sigh of relief compared to last year, where there was a bit of a gap when they turned up to a security conference and got a lecture on values. So it was good to hear that there was still fidelity on the U.S. side in believing that NATO allies could step up. But there's a lot of work to do. I think Rubio, as well as Undersecretary of Defense for Policy Colby from the Pentagon, sent a strong message that the U.S. expects Europe to step up in terms of ramping up its conventional defense and taking a leading role.
Yeah, but is this about money, or is this, when you talk about shared values, I mean, he said, he went after climate change. It was immigration. Like, do they want a Europe maybe under a more far-right leadership that is really aligned with the U.S. socially, or is he talking about, spending for NATO?
It could be both. Let's focus on the positive story, which is interests. And I think he did lay out a number of interests that were shared. He talked about controlling illegal migration. He talked about reindustrialization. He talked about investing in defense. Those are all things that I think a lot of European leaders are struggling with in their own countries, and that's a basis for cooperation with the United States. Supply chain security was another one that he brought up. But you're absolutely right. There was that undercurrent of values, particularly Christian values. And I think a lot of Americans and Europeans listening to that probably couldn't recognize themselves in that stories because their own countries are much more diverse.
Rachel, so we had an exclusive sit-down with Marco Rubio. He spoke to our editor-in-chief, John Micklethwait. They discussed the future of Western alliances and whether either side has the upper hand in the war in, of course, Ukraine. So let's listen in.
I think that's a difficult war to say anyone is winning. The Russians are losing 7,000 to 8,000 soldiers a week. A week. Yeah, not wounded, dead. Ukraine has suffered extraordinary damage, including, overnight, and again, to its energy infrastructure, and it will take billions of dollars and years to rebuild that country. So I don't think anyone can claim to be winning it. I think that both sides are suffering tremendous damage, and we'd like to see the war come to an end. It's a senseless war. In our view, the president believes that very deeply. He believes the war would have never happened had he been president at the time. So we're doing two things. So obviously we continue. Look, we don't provide arms to Russia. We provide arms to Ukraine. We don't sanction Ukraine. We sanction Russia. But at the same time, we find ourselves in a unique position of serving as probably the only nation on earth that can bring the two sides to discuss the potential for ending this war on negotiated terms. And it's an obligation we won't walk away from because we think it's a very unique one to have. It may not come to fruition, unfortunately. I hope it does, and I think there are days when I feel more optimistic about it than others. But we're going to keep trying because that is, in the end, this war will not be solved militarily. It will be, in the end, it will come to a negotiated settlement. We'd like to see that happen as soon as possible.
Do you worry that if Ukraine loses the war, it's going to be a disaster for the transatlantic relationship? Because Americans will say the Europeans didn't provide enough arms, and Europeans will look and remember the meeting in the White House and Zelensky and Trump, and they will blame the other way.
That would ignore reality. Look, Ukraine, first of all, they deserve a lot of credit. They fought very bravely. They've received extraordinary amount of support from the United States to the tune of billions of dollars that pre-exist the war. In fact, Ukraine probably wouldn't have survived the early days of the war had it not been for American aid that came to them even before the war had started, with the Javelin missiles that disabled the tank formations.
I wasn't saying it was fair. I was just saying there's a possibility you have to deal with perceptions.
No, but I'm not worried about that because I can tell you that I think history will understand that. But I don't think the war is going to end in a traditional loss in the way people think. I don't think it's possible for Russia to even achieve whatever initial objectives they had at the beginning of this war. I think now it's largely narrowed down to their desire to take 20% of Donetsk that they don't currently possess. And that's hard. It's a hard concession for Ukraine to make for obvious reasons, both from a tactical standpoint and also from a political one. And so that's kind of where this thing is narrowed. And, we'll continue to search for ways to see if there's a solution to that unique problem that's acceptable to Ukraine and that Russia will also accept.
The very common theme of your speech was the need to share the burden, the need for Europe and America to do things together, which was slightly different from the Vice President last year. Were you kind of offering a carrot where perhaps he was offering a stick?
I think it's the same message. I think what the Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization, and it's a great civilization. And it's one we should be proud of. It's one that's contributed extraordinarily to the world, and it's one, frankly, upon which America is built. From our language to our system of government, to our laws, to the food we eat, to the name of our cities and towns, all of it deeply linked to this Western civilization and culture that we should be proud of, and it's worth defending. And ultimately, that's the point. The point is that people don't fight and die for abstract ideas. They are willing to fight and defend who they are and what matters and is important to them. And that was the foundation he laid last year in his speech, and we add on into this year to explain to people that when we come off as urgent or even critical about decisions that Europe has failed to make or made, it is because we care. It is because we understand that ultimately our own fate will be intertwined with what happens with Europe. We want Europe to survive. We want Europe to prosper because we're interconnected in so many different ways and because our alliance is so critical. But it has to be an alliance of allies that are capable and willing to fight for who they are and what's important.
Do you see a parallel? You seem to see a parallel between the Cold War, which I think I would argue that America beat the Soviet Union because it had a common idea and it had allies on its side. You're now in a struggle with China. As people say, you've often been a hawk on that subject. You're in a struggle with China. Do you think you absolutely need Europe to be able to?
Yeah, I would say two things. The first, the mentions of the Cold War are to remind people of everything we've achieved together in the past, in times when there was doubt. I mean, it's hard to imagine today, but there were those who believed in the 60s and 70s even that at a minimum we had reached a stalemate, and worse, that perhaps Soviet expansion was inevitable and that we needed to come to accept it. There were voices that actually argued this. And so it's reminding people of what we've done together in the past, but it's also a reminder that at the end of that era, when we won the Cold War, there was this euphoria that led us to make some terrible decisions that have now left us vulnerable. It deindustrialized the West. It left us increasingly dependent on others, including China, for our critical supplies, and that needs to be reversed in order to safeguard us. And so I do think, yes, it would be ideal to have a Western supply chain that is free from extortion from anyone. Leave aside China, anybody else. We should never have to. We should never be in a situation where our alliance and our respective countries are vulnerable to extortion or blackmail because someone controls 99% of something that's critical to national life. So I think we do have a vested interest in that regard. Today is different than yesterday, but it has parallels, not in that China's the new Soviet Union, but that in our future, collectively, we'll be stronger if we work on these things together.
Various sort of allies. Mark Carney has just been to Beijing. Starmer has just been to Beijing. Merz is about to go there. Do you worry that they're beginning to drift off too much in that direction?
So we expect nation states to interact with one another. In the end, we expect nation states to act in their national interest. I don't think that is that in no way runs counter to our desire to work together on things that we share in common or threats we face in common. But I don't think visiting Beijing or meeting with the Chinese is, on the contrary, I think it would be irresponsible for great powers not to have relationships and talk through things, and to the extent possible, avoid unnecessary conflict.
The U.S. Secretary of State, Marco Rubio, speaking exclusively with Bloomberg News editor-in-chief John Micklethwait. Now we're back with Rachel Ellehuus from RUSI. Rachel, when you look at China, I mean, they had a big present at MSC. What was your main takeaway, actually, from the last 3 days? Everyone was trying to position themselves in slightly either more friendly or a different light.
Yes. Well, let's maybe start with China. I think they projected a lot of confidence. Their foreign minister was out there really presenting China as the guardian of the multinational order. He spoke about all states being equal, in particular small and medium-sized countries. And so it was almost as if he was saying, move over, U.S. China's more than willing to take over the role that you vacated as guardian of the international order. I thought the Europeans were a bit more on message than usual between the President of Finland, President Macron, and even Prime Minister Starmer. I thought they tried to project a Europe that really is trying to step up and do more for its own conventional defense along the lines of what the United States asked. You also heard from Stubb really a defense of European values and pointing to all the good metrics around European quality of life that are something that should be not maligned but really held up. And then maybe if we turn to Ukraine, President Zelensky spoke not once but twice. He really talked about the fact that Russia is under pressure, that reminded people that Russia started the war, and called on some of those countries that have been enabling Russia's war on Ukraine, like Iran and, frankly, like China, to think twice and to do the right thing in terms of helping Ukraine win the war and bring it to an end.
I mean, the world seems so volatile and unpredictable. Out of everything that we've just talked about, what do you think is the single biggest security risk that we're underestimating?
I think the risk is just the general breakdown of any sort of rules-based order or rules of the road. Throughout the Munich Security Conference, you heard leaders point to things like the right to self-determination, the UN Charter. At the same time, there's no doubt that the UN Charter, NATO, the European Union are ripe for disruption and reorganization. So I think the risk is we fail to see the challenge ahead of us, and we rush to restore the way things used to be rather than trying to make all those organizations fit for purpose.
But who has the biggest challenge here? I mean, it seems like it's the EU and NATO. Does the EU get its act together, and can NATO survive without the U.S.?
It's very difficult. I mean, we need the support of the United States, and I think we heard a clear message that at least for the next 5 to 10 years they'll be around in Europe, but want a more equal partnership. From a European context, I don't think it's the EU. I think it's some combination of European powers. When France, Germany, the UK, Poland, and some of the Nordics work together, they can create a lot of momentum in the right direction. And then, of course, we have to remember organizations like the United Nations and a lot of the charters that underpin that and how they really keep us safer. Freedom of navigation, safe haven, all of these principles that have seemed to have been cast aside in recent years. I worry that those will be left on the table.
But Rachel, I mean, so the worry I have with Munich Security Conference is that people also try and push their message, so they may think one thing but then actually say something else. Is there any doubt in your mind that the U.S. is disengaging with Europe? So we can call it de-risking, maybe not decoupling, but some of the U.S. administration were saying, no, nothing's changed, and that feels just not true.
No, everything has changed. And in addition to Rubio, there was a large congressional delegation from both sides of the aisle, Democrats, Republicans. I think they were trying to be rather reassuring, but they also needed to be quite realistic, that it's not going to go back to the way it was, and that a more equal partnership in which Europeans, but also allies and partners in the Indo-Pacific and elsewhere, have a more equal say and more agency is a healthier one, and it's a better partner to the United States.
Thank you so much for joining us. Rachel Ellehuus, their RUSI Director General. Now, coming up, tamer than expected, U.S. inflation bolsters the case for Fed cuts this year. We'll go back to the markets and discuss that outlook next. And this is Bloomberg. Bonds rising, stocks steadying as cooling U.S. inflation fueled rate cut hopes, calming a market recently rattled by AI disruption concerns. Now with us now, Vasiliki Pachatouridi, EMEA head of iShares fixed income product strategy, and John Stepek, author of Money Distilled. We have a nice quiet day on the markets, which frankly is a welcome relief given everything else that we've seen. I mean, is it quieter just because it's U.S. holiday, John? And so it kind of, I mean, I say it's quieter and then something blows up, but it does feel quieter for the market.
Yeah, I feel that's a bit of a hostage to fortune. I wouldn't want to jinx it, but yeah, no, I mean, yeah, obviously it's a US holiday, but also at the end of last week, inflation came in a little bit weaker than was expected. And I think that means obviously the prospect of Fed rate cuts is higher. And in turn, that sort of calmed markets down a little bit because it has been a kind of hectic couple of weeks. And it did feel it was getting a little bit over-dramatic towards the end of last week, I think.
Yeah, I mean, is this because the market, I'm not exactly sure, Vasiliki, what the market is priced in for?
I think it's a little bit of perspective as well. Obviously, we've been now 6 weeks into the year. It's kind of that realization that, the macroeconomic environment is supportive for markets. We have inflation behaving, growth being resilient, productivity resuming. We know it's not going to be plain sailing. There's been bouts of volatility. And I think in this environment, it's a good place to start investing, really.
What would you be investing in right now? Because, again, I don't know really what to do with AI. Do you, John, know what to do with AI?
No, actually, I don't. I feel hopelessly left behind because there's all these guys coming on Twitter and things like that saying it's going to end the world or it's going to turn us into a utopia. And I'm sitting there thinking, I don't even know how to vibe code yet. This is, I need to catch up with my skills, I think.
I don't know. I mean, the market is so anxious about AI in general because it's not about valuations, but just the business model they're disrupting.
Yeah, obviously, I mean, we've had like this massive issuance coming from kind of the hyperscalers. It's been like, 26 billion already into 2026. I think it's important, again, we take a step back and just look at why these companies are coming into the market. And the context is important, but like they're coming because they're choosing to. These are quality-backed companies. The issuance is well telegraphed, is well absorbed. It's not speculatively. And actually, they're issuing to fund growth and productivity. And I think overall comes back to the strength that we're seeing in credit markets, particularly the higher quality part of credit, which I think is an excellent place to be. It comes back to kind of our thesis for fixed income investors this year, which is all about quality and income.
Yeah, I mean, one of the questions that we've been asking ourselves, John, is that there hasn't been much of the correlation of older days, right, with, for example, bonds and equities. We saw a little bit of that in the last 2 weeks. Are we going to go back to a more normal market functioning, or is that, of yonder years?
I mean, we may do, but I think the risk is that, one thing that strikes me is there's a risk that we'll get more equitisation this year as well. And one thing that worries me slightly is we get a whole load of supply hitting the markets and then there's no one there to absorb it. Because, you turn around and think, well, hold on, these AI companies are spending a lot, but they're not necessarily making a lot. And then on the other side of that, you've got this sense that, but at the same time, the products they're making are going to destroy the business models at lots of different companies. And people often say those two things are in conflict, but they're not really, because if you go back to .com, then, okay, there were plenty of .com companies that didn't work out, but there were plenty that did disrupt things, and the fibre companies were quite right to spend, but they also didn't make any money. So I can see a scenario where the AI companies spend a lot and they disrupt everything, but all of the gain goes to, say, consumers, for example, rather than investors. So I think that's going to be something that worries the market this year.
I slightly disagree from the perspective of the issuance that we've seen in the market has been extremely well absorbed. And it's not like a one data point, like they came into the international markets. They issued up to 100 years long debt and very well absorbed. And I think to me, again, just more from my fixed income background, it speaks to the rise of the structural buyers of quality credit that we're seeing and the decoupling of the past couple of years of credit investors and macro and spreads. We're seeing people really kind of allocating to credit as a way to perhaps diversify their portfolios from government bonds, where I do see more of the risk from fiscal spend and volatility coming and essentially hurting the government bond market as opposed to credit, and in particular these companies, which again, just a reminder, they're such a small part of the credit markets. US tech is less than 10% of USIG, less than 5% in European fixed income markets.
I mean, and you think Europe is still attractive. I'm going to actually, we heard from Keir Starmer. John refuses to come on unless we play a bit of UK because he loves talking about the UK. Vasiliki, you say Europe in general is still pretty attractive to invest in. Does that include the UK?
I would say a bit of a more of a nuanced view. Definitely Europe.
That's very tactful.
It's an attractive place to be. I mean, it's driven by the real yield story that it's nearly historic decade highs, and also I just also like to see where. When I look at bond ETF flows, obviously it's my day job, but it gives you the sentiment. I mean, last year we saw more than 50% of flows into bond ETFs going into European fixed income strategies. Obviously, we had a little bit of the dollar kind of weakness playing into it, but I think there is a structural favoritism towards Europe. I mean, in the UK, obviously, there is more weight on the growth picture. There's probably more cuts coming. But when I speak to our sterling-based investors, they also see the value of diversifying into the plethora of asset classes that you can now tap into fixed income, both from kind of Europe, emerging market debts. Year to date, fixed income, kind of local currency emerging market debt is probably the most popular fixed income asset class when it comes to flows, which I think it's pretty staggering.
We'll also talk about the UK and actually whether there is a kind of rapprochement with the EU. Here's Keir Starmer at Munich Security Conference.
I'm often urged back in my own parliament that we should walk away from what we've got, and I reject that. But I think simply sitting where we are isn't good enough, and therefore the change does need to come. That needs Europe to be stronger, to be working more closely together. And that's why I said what I said about the UK-EU relationship. We're 10 years on from Brexit. We are not the Britain of the Brexit years. We're a Britain that wants to work with the EU even more closely.
I mean, fixed income strategies may beg to differ, John, but your view on what he said?
I mean, look, I think he's kind of saying what he's got to say. He's kind of trying to walk a tightrope between the US and Europe. But one of Starmer's big problems is that he has no political capital left. So the idea that he would want to reopen the Brexit wound in a significant manner strikes me as entirely unlikely. Because he's torched all his political capital and he's basically in survival mode now. Most people still don't think he'll last the year, so.
What does that mean concretely for the markets? That his policies are dismissed, or that does he become more radical? I mean, we still have to see. I don't know whether there's a real chance that he gets overthrown. I keep on being told by insiders that Labour are a milder bunch than the Tories.
It's not so much they're milder, it's just harder for them to do because of their structural rules. So this idea that they're less ruthless strikes me as, that's a kind of emotive term. Actually, it's just what they have to do to get rid of a leader is much more difficult. I think the problem is that there's a new kind of issue coming up every week, and he's going to be on the back foot firefighting. So basically, if I was in the markets about this, I wouldn't particularly bet on Britain getting much closer to Europe than it already is. But, the talk is nice, and it means, and also the good thing is Britain can be a bridge between the US and Europe at a very difficult time, which is the role we've traditionally played.
Okay, thank you both for joining us. It's a great conversation to get us started on a Monday morning. Vasiliki Pachatouridi, EMEA head of iShares fixed income product strategy at BlackRock, and our very own John Stepek from Money Distilled. Coming up, the push to get more people in the UK investing. We discuss the outlook for the UK retail market with Robinhood's UK president. That's coming up next. Of course, the full focus will still be on geopolitics today. Markets are a little bit quiet. If you look at what the markets are looking at, look, gold briefly dipped below 5,000. Now it's above 5,000. Government bonds in Germany and the UK seem to be edging higher. Treasury futures pretty much steady. Again, traders continuing to fully price in a Fed cut in July and then a strong likelihood of a move in June. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. Secretary of State insists that Europe's fate is intertwined with the U.S., but says it's drifted away from their shared Western values. A growing chorus of tech leaders warn of an impending global crisis as surging demand for AI fuels a shortage of memory chips. Plus, Iran is set to hold talks on its nuclear program. Israel says it must be stripped of its nuclear capabilities. Now, in just a moment, we'll discuss the future of crypto and retail investing with Jordan Sinclair, president of Robinhood UK. But first, some of the biggest names in tech, including Elon Musk and Tim Cook, are warning about a global chip crisis in the making. Now, they say a shortage of memory chips is beginning to hammer profits, derail corporate plans, and inflate price tags on everything from laptop to cars. And the crunch is only about to get worse. With us now is Neil Campling, Bloomberg senior strategist. Neil, thank you so much for joining us. So how is the huge increase in memory demand actually showing up in corporate outlooks, but also company models?
Yeah, so basically with the latest AI chips, they use somewhere between 6 and 10x the amount of memory of the earlier H100 AI chips. So there's a huge amount of consumption required for that. So it's having that impact. And we have to remember that it takes between 3 and 5 years to build a new memory fabrication plant. So that's creating this bottleneck. And it's quite interesting to hear that the world's largest memory chip maker, Samsung, are also saying they'll also be impacted negatively because, of course, they make smartphones, they make PCs and TVs, etc. So while they win on one hand, they also lose on the other. And this is going to get worse. We've heard from many corporates about this chip impact. And in fact, Hynix, another memory producer, have said it's going to get worse before it gets better in terms of being able to supply to meet the demand. So it's a big issue.
Neil, at the same time, I mean, the mentions of AI disruption on management calls is really skyrocketing. How is that playing out amongst investors? I mean, is this why we saw these choppy markets over the last 10 days?
Yeah, absolutely. We've seen the nervousness, and I think part of that nervousness is because we don't necessarily know how it's going to impact those business models. So even when a company like a CBRE, the Goliath in terms of commercial real estate, have come out and said, we're trying to quantify that we can use AI to our advantage to reduce our research cost by 25%. The stock actually got hit hard because the investors' view was, well, if they can do it internally to save 25%, what can external models do? They can probably do it much more efficiently for a very small price. So it's that unknown, and it's also the risks that whilst you're trying to be treating this head on, the problem is who else can do this? And it's so fast and moving so quickly, we're struggling to keep up with the pace of innovation.
Neil, thank you so much. Neil Campling, there, Bloomberg senior strategist on everything to do with AI and tech. Now, when it comes to retail investing, the UK is sometimes characterized as being a nation of savers, with retail investors being risk-averse and preferring to hold their wealth in cash instead of equities. Well, one company trying to change that is Robinhood, which, after taking the U.S. by storm, is now trying to encourage more retail investor participation in the UK. Now, the company also remains optimistic on the future of crypto, despite recent volatility. Well, joining us now is Jordan Sinclair, president of Robinhood UK. Jordan, thank you so much for joining us. I mean, first of all, just when you look at UK appetite and investors' appetite for risk, are we catching up with the U.S. or is it still very much behind?
I think you hit the nail on the head. The UK consumer is given kind of not enough credit these days. There is a segment of customers that does want exposure to the markets. They're really engaged. News, 24/5 markets. But our research and our customer research really does tell us that there's behavioral barriers. Yeah. People think investing is a reward for being wealthy, or that you need a lot of money to get started. I think that's what we can bring to this market, where still incumbents are charging high fees, £12 to make a single trade, or charging an account fee to getting started. You remove those barriers, I actually think the UK has a huge opportunity.
But do you think it's about money, or is it just about perception? And again, when you look at regulation, this country has, I guess, kept a lot of customers quite safe. But then the perception is that you could risk a lot instead of taking advantage of markets going up.
I think perceptions are changing, and there's a great coordinated effort. HMT, the FCA, the government, the Bank of England, firms like ourselves bringing technology-enabled solutions. We actually think you are seeing change. I suspect you'll see more and more ISAs open, more and more customers investing. And just like long-term investing takes time, I think sometimes we like to try scorecard ourselves today. But I do think when you look back in 5 years' time, we've actually made massive change, and we are going to see that in the long term.
I mean, there has been a massive push to try and get even some of the investor money into pension funds to invest basically in equities in the UK. Are you hearing the government supporting you in your efforts to bring this to more investors in the UK, or would they rather this money being used elsewhere?
I think customers are continually looking at their portfolio and now even more so thinking about how it's diversified globally. And sometimes that is just how the markets go. The US was a big focus for a long time. Now our customers are interested in UK exposure, European exposure, US exposure. So I think sometimes it's just a little bit of how the markets move and then being well positioned, where the UK does have a market where the FTSE is doing well relative to the US S&P 500. And customers think, oh, maybe I'll move cash there. So sometimes the markets actually drive the movements rather than necessary regulation or a push from the top.
Jordan, how many customers do you have in the UK now, and what's your target in 3 years?
We have 750,000 customers outside of the US. We have 27 million customers globally. I mean, ultimately, we feel like we can capture this market no different to how we've done in the US. Right. We're building more and more products, meeting both local customer needs, but also bringing some of our AI-enabled features like Cortex, where we can really help customers. And I think in the UK, that's that bridge in confidence to just get started, where you have a tool where you can really help you understand why the stock is moving or what's happening in the market. And that might be
they watch Bloomberg for that.
They watch Bloomberg, but I think sometimes they also need something that talks to them in a language they understand. And you have that very active trader, and we'll serve that customer. But that customer who's just starting, how do they get into the market? I think that's a real opportunity, and we're already seeing that here.
And Jordan, do you look at the UK as kind of a gateway to Europe? So if it's successful in the UK, it'll do better elsewhere? Or, for example, in Italy, a lot of investors just are used to high premiums when they invest. So it's a different market. People speak about the spread more in the street. So it's more of an investing culture.
Yeah, I think in the UK and Europe, we're looking at that market. How do we serve those customers individually? They're not all the same. As you say, Italian and UK customers may think about their portfolio slightly differently. In the EU, we've actually launched tokenized equities. So we have over 2,000 tokenized equities. There we see a great opportunity to eventually actually go 24/7. I think remove some of the other barriers like settlement times or withdrawal times or being able to actually move that asset within your wallet in a DeFi space. So I think there's opportunities in both Europe and the UK. But we do see how we can disrupt both markets with bringing our US innovation, but then tweaking for local customer needs.
What's crypto today? It feels like it's behaving much more like, I guess, one of the older asset classes.
I think we're long-term crypto in terms of a technology. I mean, tokenization is, Vlad, our group CEO, described it as a freight train that's just not stopping. And I think we see that in the markets. I think now is a relatively short-term view on how the asset's performing. We still see our customers very engaged in January up on December. February's gone off to a good start. So long-term, we're very bullish on the crypto technology.
Jordan, when you look at AI, so we talk about it every day in terms of disrupting, even disrupting, for example, in research for a lot of the banks. What does it mean for investors? I know that some of the capabilities that maybe it was once only the big groups that could have would change the way that retail investors could behave or have access to that information.
Access is exactly that. Why was there such a big divide between institutional investors and retail investors? Why, if you were in Mayfair, did you have access to data, tools, but if you're in Manchester, you didn't? I think it's bringing those two together where the retail investor is equipped with all the tools to make informed decisions. I think when you close that gap and reduce some of those fees, you start to see retail even more empowered. And I think that's where we started, where the retail investor isn't given enough credit because they've been locked out for a long time. But we really do see how AI can close that gap. And if you're a technology business, we're best positioned to actually solve that for customers. With some of the incumbents, I think it's very difficult for them to pivot and actually help their customers.
But so will AI mean that some companies will go bust?
I think competition will naturally move customers' assets in time. And I think we've seen that in the US with our business, capturing meaningful share from the incumbents. And we're seeing that in the UK already. I think headlines last week of outflows from some of the larger traditional firms who are still charging high fees. And their customers are now awake to that and actually want to move to firms like Robinhood.
Talk to me a little bit about private markets. I mean, there's so much, people are excited about private markets because, again, they say, look, it gives access to investor to an asset class which previously didn't have, and that's unfair. Others saying, look, private markets, the problem is that it's difficult to know how you value them, especially if you're constantly trading them and there's not much liquidity. It's just hard to know how much that asset is worth.
And, the market's changed over time. I mean, having access to the public markets was the way to accumulate wealth in these new innovative companies. Companies are staying private for longer. We saw Anthropic's valuation very recently. Retail's locked out of that. And I think that is perhaps what you're seeing with AI particularly, where retail isn't given exposure to this massive wealth gain in the private markets where they really should be, right? And I think, as you described, it is an inequity that perhaps they should have a way to take part in this massive wealth gain in AI in particular.
Going back to regulation, how do private markets, you think, get regulated in the UK?
I think we're already seeing the open discussions with industry, and that's what I think is the best way to regulate it, is talking to firms like ourselves who've perhaps done it in the EU, have a global business, talking with the Bank of England, talking with the FCA, with Treasury, and saying, how would you make the UK the most competitive place for tokenization of private assets? And I think real-world assets in general, we recently launched Robinhood Chain and Testnet, where it'll be the best chain to have tokenized real-world assets.
But Jordan, how do you, I mean, the underlying value of these private markets, like how do you value them?
There is liquidity in these private markets, and I think today the trouble is that's for secondaries, for high net worth investors, for employees, for private banks. That's where retail's being locked out, where there is a level of liquidity, there is a level of price discovery. It's just that it's only for some. And I think that's where tokenization and private market access can change.
Jordan, thank you so much for joining us. Jordan Sinclair, the president of Robinhood UK. Now, predicting the next economic crash or financial crisis has always been more art than science. Today, there is an added complication. As we're talking about, the rise of private markets has obscured the data which regulators and economists rely on to identify risks in the global economy. It's the subject of today's Bloomberg's Big Take, which was co-written by Laura Noonan, Bloomberg's global finance reporter, who's with me now. Always good to speak to you. So, I mean, what can regulators do to stress test the system if they are flying blind because of lack of data?
Morning, Francine. Thanks for having me. That's a great question. Regulators have really been grappling with this for the last couple of years because they know that their powers are limited. So what the Bank of England has been trying to do here in the UK is just go out and ask firms to voluntarily provide information which they don't legally have to provide at this point. And that's their pioneering approach, which they've been trying to do. But it does rely on goodwill from the industry. And the way you kind of scare them / convince them to do that is you say, well, listen, if there is a problem lurking somewhere, would you not rather know about it? And that's been one of the approaches.
So how deep, I guess, are these unseen ties between private credit and banks?
Pretty deep. I mean, in the US, they did some data showing that there was $2.2 trillion of lending and commitments from banks to other financial institutions, which is a lot. The problem is the links are complicated and it's difficult to really understand what's underpinning them. So, yeah, one of the concerns has been just that there could be an issue in the non-bank sector, which then hits the banking sector. That's a feedback loop. But that is one of a number of financial stability potential feedback loops that could come from these markets.
So how can regulators, what can they do about these risks?
One of the main reasons we're seeing such a huge focus around data is that anyone who follows international policy making will know there's not exactly a good market for making new rules right now. They know that if they try to regulate in a traditional sense private markets, there is not political will to do that. It's all about deregulation at the moment. So what they're trying to do is shine a light and hoping that by shining a light on dangers is as much as they can through data, the market will take care of itself. That's the hope.
Laura, I mean, this is a fundamental, like, I think it's a really deep question, is that there is definitely, like, a move towards deregulation.
Yes.
But overall, like, how much of the regulation we have, especially in the UK where they've been quite cautious, is it, it protects people?
It protects, as the previous guest said, it does protect retail investors from some of these problems in theory. A lot of their pension funds, though, are actually already there through institutional investors. So I think caution in this area, I don't think caution really protects people because there are major issues around things like valuation in private markets. So it's not just about price discovery. It's about how do you value that building that you own and what's the governance around that. And there are massive issues around transparency. And I think having clear, transparent data, it would be a big help in uncovering some of these risks.
So interesting, Laura. Thank you so much. Great reporting. I urge everyone to actually go and look at our Big Take. Laura Noonan there, Bloomberg's global finance reporter. Now, coming up, Iran discusses its nuclear ambitions with atomic regulators, but Israel says they must be eradicated. We'll have plenty more on that next. And this is Bloomberg.
Now we are at a decisive point at which we have to decide what is going to happen with FCAS, what is the way ahead. We will decide that in the weeks to come, yet FCAS is not dead. If FCAS came to an end That would not be the end of defense industrial cooperation in Europe. It would not be the end of the world or the end of the German-French relationship and friendship.
For France, it's totally critical to be involved in big and important European projects, and so we stand for it. And I mean, this cooperation, the industrial part is difficult, we know that, but the responsibility of the governments, of the leaders, is to try and push very, very much, because it's not only a signal for France and Germany, I mean, it's for Europe, and we need to take our responsibility and to do, I mean, anything we can to deliver.
Now the German defense minister and then the French defense minister delegate speaking in Munich about the future of their joint fighter jet program. Now, Representative Alexandra Ocasio-Cortez is better known for her strong progressive stances and her foreign policy views over the course of her 7 years in Congress. But this weekend, she was at the Munich Security Conference suggesting a new approach and fueling more speculation of a presidential run in 2028. I began by asking her thoughts on a new world order, like the one spoken about by Canadian Prime Minister Mark Carney at Davos last month.
I think that Prime Minister Carney's remarks at the World Economic Forum were words that rung around the world in raising this question. But I think that also in his remarks, as well as part of this larger conversation, there was this undertone, this undercurrent, this suggestion that it was a rules-based order sometimes. And I think that that is the issue that lies before us, is that in a so-called rules-based order, the rules for whom? Because for all too long, the rules only applied to the United States, Europe, its allies, and we would carve out exceptions for the global south. And I think that when you have a rules-based order where you carve out exceptions to our values, exceptions to our rules, eventually the exceptions become the rules. And I think that, to your original point, over the last 5 years, we've seen such a breaking and such a fraying of these alleged Western values that people wonder if it ever existed in the first place. So I don't know if it's necessarily that we are in a post-rules-based order. I think it's possible that we were in a pre-rules-based order. And we have an opportunity to explore what a world would look like if we upheld democracy, human rights, trade that actually centers working-class people instead of accruing overwhelmingly the benefits of trade to the wealthiest. But if we reoriented a new era that could actually help people and show how foreign policy and healthy foreign policy can show up and help them in their lives.
I mean, we have a number of European leaders here, and I know that certainly behind private closed doors, they say, look, the one question I want to ask the U.S. is, if I'm in trouble, will you come and help me? Are you still an ally? Or do we need to really decouple or certainly de-risk? Your answer to that, Congresswoman?
Well, I mean, we are, of course, representing a broad spectrum of the United States here today. And I think I'm very grateful that we have, you know, it's unfortunate, I guess we have to speak to the elephant in the room, that the partisanship in the United States has made this question something that even has to be asked behind closed doors in the first place. I know that the Democratic Party is here for our allies. We are shocked at the president's destruction of our relationship with our European allies. His threatening over Greenland is not a joke. It is not funny. It threatens the very trust and relationships that allow peace to persist. And so I believe what I can say is that unequivocally, the vast majority of the American people do not want to see these relationships frayed, and they are committed to our partnerships and our relationships and our allies.
U.S. Representative Alexandra Ocasio-Cortez speaking at the Munich Security Conference. Now, Iran's Foreign Minister Abbas Araghchi says he and nuclear experts are in Geneva to discuss a deal ahead of U.S. talks on Tuesday. Araghchi is set to meet the IAEA chief, Rafael Grossi, after the Israel Prime Minister Benjamin Netanyahu said an Iran deal had to curtail its nuclear capabilities. Well, let's get more on this with our Middle East editor, managing director, Onur Ant. Onur, thank you for joining us. So what can we actually expect from this Araghchi IAEA meeting later today?
Well, the key issue that's going to be discussed between the Iranian foreign minister and the IAEA's Grossi is going to be verification visits to the sites, nuclear sites in Iran that were bombed by the U.S. during the 12th-day war in June last year. Back then, Donald Trump, U.S. president, had said that those sites were obliterated, as a result of which Iran had severed access to those sites by the IAEA for verification or other purposes. The explanation was basically that the sites were not safe to go in. They could have been contaminated, and the IAEA's access to those sites has since been non-existent. Now, the agency has been recently pushing to overturn that decision. They said it should now be safe to resume verification, but that hasn't happened yet. Now, last week, when Iranian President Masoud Pezeshkian talked about those possible visits, we have seen some flexibility, a change in the stance of the Iranian administration, and it appears that this has somewhat turned into a point of leverage for the Iranian administration, because verification access to the nuclear sites are somehow linked to the indirect negotiations that are going on with the U.S., during which we're going to see a second round later this week in Geneva. Francine.
Onur, how much do Netanyahu's comments over the weekend move the dial for U.S.-Iran talks later this week?
Quite a bit. Netanyahu made it clear that they do not want any nuclear enrichment capabilities in Iran. And we've seen comments along the same lines by the U.S. President Donald Trump as well, just on Friday. Now, the problem there is that this is a clear red line for Iran. They have said they've said for years now that this is a right for them under the Non-Proliferation Treaty, and they do not want to basically give it up. But having said that, only on Sunday we have also seen that there seems to be some shift in stance in Iran on this particular issue as well. We've seen the Deputy Foreign Minister of the Islamic Republic saying that everything can be discussed, including this nuclear enrichment issue, but he also linked that to a possible lifting of sanctions by the U.S. So what we are seeing is that there are these red lines both for Iran, the U.S. and Israel, and we have seen the emergence of some room for maneuver flexibility around those red lines, which is all going to sort of come to a head possibly tomorrow when the Iranian and American officials start their second round of talks, indirect talks in Geneva.
Yeah. Onur, quickly, meanwhile, Donald Trump's Board of Peace is also due to meet. What might that mean for Gaza?
Well, the meeting will take place on Thursday. So far, we have seen that the U.S. president trying to inject some momentum in that event by announcing a total of $5 billion in pledges. But we also know that for Gaza to be rebuilt, more than just the money is necessary. Both Israel and Hamas are far from basically coming to a compromise over some of the tricky issues in Trump's peace plan, including the Israeli withdrawal from Gaza and Hamas's disarmament. But most of these issues are likely to be sort of taken up on Thursday when the inaugural meeting of the peace board is convened in D.C.
Onur, thanks so much. Bloomberg's Middle East Managing Editor, Onur Ant. So up next, it's Bloomberg Markets. I stay with you for a whole other hour. This is Bloomberg.